All right, so in this video, we are going to make sure that we tackle into how to place trades on the Metatrader 4. Also, to answer a question about the leverage, make sure whatever leverage that you choose, it's at least 1 to 500. And I say that because it's going to make a difference on how much money that you actually profit on your trades. I've set mine to 1 to 500 so that I can make the most. I noticed if I did a 1 to 100 leverage, then I'm not making as much money on the trades. And what that means is 1 to 500 means you could trade as if you had 500 times whatever is in that account. Okay, so it just allows you to practice and operate with more money than you really have. So just think about when you have a credit card. When you have a credit card, you may have a $1,000 limit, right? You really don't have the money, but the bank gives you the ability to charge up and use it, right? It's the same thing with trading. So with your leverage account, small retailers like us, we only make up about 10% of the market. The banks, hedge funds, insurance companies, countries make up the other majority, pushing the market up and down, up and down. We're not really making that much of a difference. So if we have $3,000 in the account, for example, because that's why we really want you to start with the lower amount so that you're not really looking at $100,000, getting all excited. Every trade is going to be like Disneyland if you do that. If you have a $3,000 account and you have a leverage of 500, it's as if you're trading with 1.5 million. And if you had a 1 to 100 ratio leverage, then it's as if you're trading with $300,000. So it's a difference in money. It's a difference in how much profit that you're really going to make. I know that question did come up, and I needed to know it when I first was trading also, was what's the difference in the leverage. So Hugo's Way does allow you to trade with a 1 to 500 ratio. Look for that. Bank on that. That's good. Okay. Your Metatrader 4 is going to be, this is the symbol that it looks like. So in your app store, Metatrader 4, not 5, but Metatrader 4 is the one that you want to have downloaded. In the demo video on how to, of course, download it, you should have known how to put in your Forex currencies and put them in some kind of alphabetical order. Once you have that set up, now let's actually get into position to where you're going to get these trades from. You can use the harmonic scanner. All right. If you're going to be doing any other trading, I would say the harmonic scanner is probably the best way to start learning on how to get these trades. All right, because it's easy enough to look at the screen, but you still have to analyze, is this the right time? So understand, I have already done a video. I've already done a video on the placing trades using a harmonic scanner with the SAR, the stop and reversal indicator. Make sure you watch that video. It may make more sense after you participate in this video today, but there is a video that I will repost up in the group today. These two videos will be back to back. How to place a trade, and then I want you also to practice with using the harmonic scanner with the indicator, because that indicator will help you identify, is this the right time to get into the market to place this trade? Okay, so we're trying to keep it simple for everybody. Is everybody good? We're trying to keep it simple for everyone, so it shouldn't be too difficult with it. So we're going to practice with just looking at just a few numbers. All right, just a few. We'll use some samples so that we can make this look a little bit more reality. Some of you have iPhones, some of you have Android. So if you have an iPhone, just pay attention to the left side of the screen where it says iPhone, and the right side of the screen where it says Android is for the droiders, and I am a droider. So when you get to the Metatrader 4, have it on your phone where you have it maybe with the rest of your trading apps. Put everything together. And when you do that, now when you open it up, realize on the bottom of the app, when you first open it up, at the very bottom, you've got your charts, you've got your quotes, excuse me, Right next to it, you've got your charts. You've got your trades. And then you've got your history. So that's basically your file cabinet of what just happened, of what profits hit and what losses hit also. So that way you can go in there and always see, you can look at just for today's activity, or you can go back last week or at least up to a month or so to take a look at what happened. That history is very important, and it's also important to journal every single trade, even in your demo account. As I mentioned before, you can have as many demo accounts as you want. You can blow it, but guess what? You can go get another one. Now, it's not that easy when you get a live account. So the whole purpose of using the demo is to get practice. Just like when we were kids, training wheels, training wheels, training wheels. Our parents let us go, and then we were riding that bike with no assistance. That's what it's going to be like. Now, I still have at least 2 demo accounts when I'm practicing something. Before I'm ready to launch it into my live account, I'm practicing it in my demo account, all right? So do this, Derek, do this, Gabriella, do this as long as you need to feel comfortable of what's working in a consistent manner. Some people were ready, especially after they look at that video that I shared with you, the harmonic scanner and using the SAR indicator. Some people after about 3 weeks are like, I got this. I got this. I feel pretty good about opening up a small account. And when you do open up your own live account, at least $200 would be good so you can have some traction. But don't go in there making silly mistakes because it's going to be an expensive mistake. All right, so just be careful when you're opening up your live account that you have felt confident enough that what was working here in demo Disneyland is working enough to go ahead and open up your live account. Okay, so this is what your phone should look like when you open up the quotes page. And what this, let's just look at the very first one. AUD CAD, for example. This is old prices, so just in case if you look at your phone now, it won't look the same. But I want you to understand the difference of what these numbers actually mean. AUD CAD, let's talk about what that relationship means. Because placing the trades is one thing, but knowing the reason why you're doing it, this is the whole reason why you're going to be a profitable trader. All right, so make sure that you guys are always reminding yourself, I am a profitable trader. And this currency pair right here is divided into, of course, 2 different currencies, AUD, the Aussie dollar, and CAD, the Canadian dollar. This relationship simply means this is just buying and selling of this currency. All right. Someone might be traveling around the world and going to, let's say, Australia, and they're from Canada. Well, if they need to buy the Aussie dollar, they need to sell their Canadian dollar. All right. So if they're going to do that, then let's just say they're going on vacation. They need to buy the Aussie dollar, sell the Canadian dollar. Happens all the time. The reason how we can benefit is because we can do all of these trades online. We don't need a broker to call in our order. We can actually look at the market on the computer and actually make these trades ourselves. And just the reverse, let's say now it's time to come back from vacation, and now that person who had the Aussie dollar needs to sell the Aussie dollar and buy back the Canadian dollar back in their home country. So all of that exchange on the charts, when you're looking at the candlesticks going up and down, all it is just the bulls and bears fighting for position on which took priority in that particular hour, that particular minute, or however the candlesticks are measured. So when you look at AUD CAD, what that means is 1 Aussie dollar equals 96 cents in Canadian dollars. Let me repeat that. When you look at any of these currencies, just think about the very first currency that you see means 1. 1 of whatever that first currency is. 1 Aussie dollar equals 9.96852 in Canadian money. All right, does that make sense to everybody? Give me a 1 before I move forward. If it doesn't, say no. All right, cool. Was that something new, Gabriella, or you already knew that? Derek, did you know that? Okay, good. Okay, good. Now you are a pro at figuring out, oh, see, I want that moment to be, oh, I didn't know what that meant. That's going to be easy enough. Now you can have an intelligent conversation with yourself to say, got it. Now I see, I now see the exchange rate. I now see how the exchange rate is what it is. If you look at Bitcoin, this was when Bitcoin was low. Look at BTC USD. One Bitcoin at that time was 66.38. Make sense now? One Bitcoin, one BTC equals 66.38. So if you were buying Bitcoin back then, that was like 2 years ago, then that was a purchase price of 66.38 back then. So now let's look and see, why are there two different numbers on this particular currency? Well, let's go back to AUD-CAD for this example. Underneath, there's always going to be a spread. You got to make sure that you have the advanced version versus the simple version, because simple looks like this. Under the iPhone, I didn't switch it, but advanced view looks like this. That way you can see more information. And you could change that just by going into placing a trade, and we'll show on the next like 2 minutes what that looks like. But it should look like this. AUD-CAD has a spread underneath it. At that time, it says 1 and 6. It doesn't mean 16. It actually means the spread is 1. Basically like 1 pip. 1 pip is the spread. The lower the spread, the better. The lower the spread, the better for us. And how that looks. Now, Hugo's Way, I'm just using that as an example. Hugo's Way wants money just like we want money. So don't you think that they want some kind of piece of whatever we're doing? They want a piece of whatever we're doing, whether we win or lose. So their spread is the difference of whatever we're looking at to buy or sell that particular currency. So like I said, if we win or lose, they're actually going to win, and they have to get at least this much in pips in order for them to make a profit. So let's look at these two digits, and you'll see what these mean. On the left-hand side is what's called your bid price. Your bid price is what you're going to pay attention to if you were selling the market. If you were selling this currency right here, you're going to pay attention to the price on the left, and that is called your bid price. All right. If you look on the right-hand side, the digits are a little bit different. They're a little bit more. 0.9686 is what's called your asking price. That's what the buyers pay. So depending if you're going to place a sell or a buy, you need to pay attention to either the left or the right price. You need to pay attention, because if you're placing it, it makes a difference. So let's take a look at the numbers. 0.96852, which is your pipette, is your selling price. 0.96868 is your buying price. The difference, if you notice, the 85 and the 86 are bigger. Those are your pips. Those are your pips. The difference between these two digits is only 1 pip. Let's go back over here to the spread, which is 1 pip. So the difference between this is how much you're going to pay. Buyers always pay more money, so you're going to have to push through at least 1 pip. The banks take that, and then the rest, now you can start to get into profit, or whatever your trade is doing. But you got to push through at least this much spread when you're placing a trade, because the broker's got to get paid. So let's just look at the difference of down here with Bitcoin. Bitcoin, it's not 1,474. It's actually 14. It's actually 14 pips. And that simply is, look at the 88 and look at the 62. The difference between it is 166.38. 38 and the 53. That difference is the broker's money. As I said, the right side, those prices are always going to be increased more than when you sell it. When you go across and you are buying the Aussie dollar, you're going to pay a higher price. When you come back and you want to sell that Aussie dollar, you're not going to get the same exchange rate. These change almost every second. every second. So you think that the currency in the United States is just 1.00. No, it's typically some digits after that. It fluctuates all throughout the day, depending on news, what kinds of things are going on across the country, of course, what's going on with politics and money around the world. This moves up and down. The way that we make profits, of course, is we're capturing where the price starts and where it ends. That measure in between is called pips, and that's how we get paid. All we're doing is measuring and benefiting if the market goes up or market comes down. All right, so iPhoners, let's look at a particular trade. The market is open right now, so I know you can practice at least on your phone. Does everyone have their demo account already set up on their phone? Either say yes or no if you don't mind. Thank you, Rosa. All right, thank you, Gabriella. Derek. If your phones are already set up, I want to make sure that you're not afraid of it, You got to make sure that you are placing some trades for profit and loss so that you're not just feeling like the world is wins all the time. You're going to win, you're going to lose. But if at least you can win at least 30% of the time, you're doing great. You're doing great. Okay, so iPhoners, look to your left. Thank you, Derek. When you take a look to your left, when you place a trade, how this is going to look is, first of all, pick the pair that you want. And I'd say pay attention and always have pen and paper when you are doing anything, because you can easily transpose a number and it will screw your whole life up just for a few seconds. And then you remember, oh, it's in demo, so I can do this again. You can live again. You can live another moment, but just pay attention to how you're putting things in. I always wrote things out first with pen and paper, and then I transferred it to my phone when I placed the trade. That's why I can visually see if there's any mistakes or make any calculations. I can do it here rather than just trying to eyeball it and put it right in my phone. All right. So if you have it, just look at whatever pair that you are focusing on buying or selling and hit the next button. You're going to just tap it, and this next button should come up. If you need to switch the view, then here, if you go into details, if you have an iPhone, switch it over to advanced view. Android, you should be able to switch it back to either advanced or simple view when you're placing a trade like this. So you're going to make sure you tap in the correct pair, tap on it. This box here, you can either trade, you can either open up the charts, all right? And this is what's next. So let's act as if we are placing a trade for a buy and for a sell. Let's get our papers out just so we can make sure that we are calculating the numbers right. And I'm going to give you a scenario of what it would be based upon these particular numbers here, just for an example. What we're going to look for, I would say for the very first one, we're going to do a market execution buy, and it's going to be 10 pips for profit, and then it's going to be 20 pips for a stop loss. Anytime you're doing anything with trading, stop losses are personal to you. It's not what your neighbor said. It's not what your sponsor had said. Take suggestions from what they're saying on what may work, but each pair rocks out a little bit different. They move different. AUDs, that whole family, they move a little bit slower. So trying to go for 50 pips in one day, it may take you a while. Where let's say the GBP or any family EUR, beginning with EUR, they move a little bit faster. And then if you start going into cryptocurrency, that's a whole other class of speed when it comes to the speed and how quickly you can get your pips. So pick a family on what you're going to do. Right now is not really the time where you want to expose yourself to all different pairs. When I first started, I was just with AUD USD. I didn't know any better. That was my grandma pair. And my friends were like, why are you with that grandma pair? I'm like, because I like it slow. I'm just testing things out. I'm okay with going 5 pips in the market. I'm good. That's it. But as I started to move forward, well, GBPs move faster, so you can get to your goals faster. So pick a family that you are going to work with and stick with that. If you're just going to work with GBP, anything beginning with GBP in the pairs, then just stick with that. If you're just going to work with AUDs, stick with that. No need to keep jumping all around. And also, if you're just going to work with cryptocurrency, when you get a little bit more mature in trades, because that and gold, you don't want to just start with that first because they move a little bit at different pace. So move your way up to that. So are there any particular pairs that you even know about that you're like, yeah, I think my team has pretty much been saying this particular pair we can rock out with? This is your boyfriend or girlfriend. You just want to pick one family, and that's it, because you don't want to keep moving all around. So pick one tonight. That's it. Tonight, we're going to practice with market execution, putting in a buy, and I want you to look and dissect the screen. At the very top, you're going to find your pair. Make sure it is what you need to be in. Right below it, it's going to be the direction. It's going to be the order of what you're trying to do. Right below it, you've got your lot size, right? The lower the lot size, the lower the risk. The higher the lot size that you input in there, the more money you make, but more risk as well. So you can tap your finger on top of that and you can adjust that. Or you can hit to the left to decrease it, or you can hit the digits to the right and you can increase that number. All right. So down below it and I'm just working through stop loss on the iPhone right now. Stop loss, it clearly says it. What is your stop loss price? You're going to put your finger right here, tap on it, and you're going to type in there exactly the price that you want to put in there. Down below it is same thing, but it's for your take profit. It reminds you on this screen, once again, on the left, remember, is your sell by market price. And if you are buying, here's that price again for your buy price. And that's it. You don't have to focus on any expirations or anything else. These are the 5 areas that you want to pay attention to when you are placing a market execution. Market execution means whatever the price is right now in the market for AUD USD, you're taking that market price and you're ready to go into the market right now. When you put your stop loss in, you are saying, well, if it's going up, I'm projecting and forecasting the price to go upward. So if my price is 0.73785, please, let's use this as a quick example. My entry price, if this is a buy, is 73785. I'm only paying attention to the 7 and the 8 because those are my pips. I'm not paying attention to the 5 in my calculation, just the 7 and the 8. If I'm looking just to increase and I want the trade to close out when it gets to 10 pips, I'm going to add 10 pips to my entry price here. And now my take profit price, your TP, also what it's called, is now 73885. 7388, and just bring the 5 back. All right, did everybody see how that worked out? All I'm doing is just looking, I'm forecasting a buy for AUD USD. All I'm doing is adding it to the 7 and the 8, the 78. That's it. And now to protect myself, just in case, you know what, it's going up. I'm thinking it should be going up, but what if it rolls backwards? What if the market's going backwards and it's going to a little pullback? I need to protect my account just in case it goes in the opposite direction. And the stop loss is going to protect your ass. So you're going to subtract whatever stop loss price that you want for that. So in this case, let's just use 20 pips. I'm risking 20 to make 10 pips for profit. Your SL, or your stop loss, is going to be subtracted from your entry price. So your stop loss price is 7.7358.5. All you're doing, I wrote all those numbers down. I wrote my take profit down and I wrote my stop loss down on a piece of paper. Now all I need to do is input them into these fields and then hit buy by market, and you're done. You're done. That's it. Any questions with that one? Any questions with that scenario so far? Just remember, if you're doing a buy or a sell, you got to pay attention. And even with this one, it gives you kind of a cheap area. Sell by market. This is your sell price. Buy by market. It's right underneath. It says it, buy. All right, so y'all must have got that. Y'all must have got that pretty cool. Now, let's just say you're going in the opposite direction. AUD, USD, I'm forecasting it to go downward. My price is dropping. I want to put in a sell order. Now you're just going to do the opposite of what you just did. The opposite. So we're now going to look at the left price, which is 73776. I'm forecasting the price to go down 10 pips for profit. So as it gets to 0.73676, the computer will automatically close your trade out for profit. Automatically close it out. It's that set it and forget it. You don't have to sit there and watch it and close it out manually. You can if you want to, but you can set it where you set the price and the computer will do it for you. Now, let's just say it's projected to go down, but the market is going up. The market is actually increasing. The price is actually increasing. So again, in the same example, let's just go 20 pips for profit, for stop loss. And you are adding the 20 pips to your existing price. And your stop loss would be 0.73976. That would be your stop loss. All you're going to do is you're going to put in the numbers, your take profit here, and your stop loss right here, and hit sell by market. So you have to figure out, first of all, which direction are you going in? Is it a buy or is it a sell? Some people have put in both at the same time, like, hell, I don't know which way. But hedging the market, you have to be very careful by doing that. But anytime you open up a trade, there is a commission that has to be paid to the broker. Very small. It could be 5 cents or anything like that. But that's how they get their money. The brokers get their money with each trade. You'll see a commission on that trade. So there's nothing due at the end of the month. There's nothing due at the end of the year. When you're placing this and you start making money, Hugo's Way, they are not a U.S. broker. So typically for a U.S. broker, you know what? They would send you some kind of earnings statement. And for some of these international brokers, I don't believe I got one for this year from last year. So once you start making an abundance of money, just make sure, yeah, you will have to be responsible for paying taxes on it. You will have to be responsible, but I'm not going to get into that tonight. That is up between you and your financial planner. But this right here is going to allow you to do a market execution if you're ready to get into the market now. There are times, as I mentioned, that the timing, you're waiting for the market to wait to get to a specific price before you want it to activate. And those are what we call pending orders. Make sure that you're going back in the 100 section in your academy to go over what pending orders are. Next Tuesday, I'm going to be going over buy stops, sell stops, buy limits, and sell limits. That is a huge one to make sure that you get that, because it takes many of us several weeks to grasp the knowledge of that. But I want you to think about it like this. Market execution means give me it right now. Whatever price it is right now, I'm grabbing it. The limit and the stop orders, that simply is I'm waiting, like double dutch. You guys remember double dutch? I'm waiting for that right time, and I'm waiting for that right price. Then it will activate and kick me into the market. That's all limit and stop orders are. All that is just one extra price that you need to input in. Everything else still rocks the same way. So let's go back to practicing with that, and we'll get things wrapped up from here. When you look at placing a trade, you've got your verify you're in the right currency pair. At the top, you're going to tap on to where it says market execution, and this drop down will happen. Now you'll start to see the limit and the stop orders behind here. So if anybody had ever given you any signals or any kind of things saying, well, put this in as a buy stop order, now you see, oh, this is where I place it. You're going to tap on market execution and you'll be able to see these available options right here for these orders. Like I said, next Tuesday, 7 o'clock, we're going to go into this. But make sure you've got, all I'm doing is bringing the Academy to life. Go into the 100 section, I believe it's 116, and it is under pending orders. It explains how pending orders work. So let's go, for example, and let's just say, I'm waiting for this price to get to 0.74000. All right, let's look at the prices now. Here's the sell price and here's the buy. I'm expecting the market to go up, you guys. But I don't want it to put me in the trade until at least the price is at 0.7400. So that's about 21 pips away. That's about 21 pips away. In the future, I have to wait. All you're going to do is tap on something like buy stop. Buy stop. You're waiting for it to reach 0.74 before it activates. Here's an example of that. Here's your pair. Here's the order that you just tapped on. Here's your lot size. Now you want to tell the computer, what price do I want this thing to go in and activate? 0.74000, just using as an example. I want my stop loss set. Remember, all you're doing is subtracting 20 pips, for example, for your stop loss. And let's just say for my take profit, at this price, what are you looking at for profit? Maybe I just want 10 pips. So add 10 pips to your price. And you're going to put in 0.74100. That's 10 pips. That's it. And if you want the stop loss, all you're going to do is take off, when I say 20, so you're going to be at 7380 for your stop loss. Everything is a plus and everything is a minus to balance it out. So when you're placing a buy order, your take profit is added to your price. Your stop loss is subtracted from the price. Now let's flip it. Let's say you're putting in a sell order. You're expecting the market to go down. So you're subtracting however many pips that you want from your price to get your take profit. You're adding to the price to get your stop loss. That's it. However, if you have to write that on a sticky note, plus and the minus for the up and down, then you've got it. That's it. And then when you're placing that order, you don't need to worry about expiration, because what that means is, let's say you tell the computer after tomorrow, if it doesn't hit, just put the date in there. If you put in there like, okay, it hasn't hit as of tomorrow, then it will delete itself. But these pending orders will sit still until it activates. And it may not happen. Let's say you place an order tonight, and let's just say it doesn't happen until midnight tonight. Doesn't matter. This is how you get paid in your sleep. Set it and go on about your life. That way you don't have to be sitting in front of the computer. You don't have to wait until 0.7400. No, you just set it on your phone and then just let the computer grasp it. Now let's just say it's 3 days later and it still hasn't activated yet. The market goes up, down, up, down, up, down. It hasn't reached that 0.7400 mark yet. If it's bothering you, you can just delete it. You can just delete the trade and you don't have to worry about anything else. Or you can just leave it alone and wait for it to do anything. It's not hurting anything. It's not pulling any money because it hasn't activated yet. Okay. Rosa, if the red is sell and the blue is buy, then why on the graph are the line colors opposite? I don't even look at those down below because that's just running the prices. Remember, those are old. I know the colors down there are a little bit different. I don't even look at that, because if I need to look at the actual charts, the actual chart of the price, then I just kind of toggle over to the chart. 7.4, yeah. Backwards, I know. Nothing makes the exact sense in this business. So I don't really look at the charting down here. What you can do is if you look, Rosa, down here, let's say where the chart is here, this shows you where your current candlesticks are in price, in time. Okay? This is the reason why I will have this is the reason why I have a computer showing my chart. So I can see all these things. Are there any questions? Are there any questions? Let me see what I can pull up. I want to pull up Hugo's Way because I think it was you, Rosa, that wanted to see what it looks like to place a trade on your desktop. And if you go to hugosway.com, there is a way that you can download MT4, your Metatrader 4, onto your computer. And you want that because you want to see the current pricing of Hugo's Way. If that's what you're going to be using the pricing from, you don't want to use FX Choice. That's like going to Safeway and thinking that they're going to have giant prices. No, you go to Safeway to get Safeway's prices. Make sure that you are going over to, hold on one second. hugosway.com, and you are pulling up Metatrader 4. Here we go. Being in the basement, away from the modem. It's a challenge. All right. Does everybody have the website, Metatrader, excuse me, hugosway.com? If that's the broker that you're using, we're just using that as an example. All right, here we go. When you are looking into practicing, does everybody have this downloaded on their, does everybody already have it downloaded on their desktop? Yes, no? Okay, good. All right, so let's practice on here. For some reason, I cannot open it up on here. But here, when you open this up, right up here in this navigator window where it says new order, that's where you're going to place an order. And it's the same information that we just did on the phone. So right up here where it says new order, you're going to click on that, and that's how you're going to be able to open up a chart and place an order. You can either place a pending order like we just did, or the very first one, you can do a market execution. So you can do it from the desktop as well. Okay, are there any questions? I hope that helped fill in some of the gaps for you so that you can really just use the harmonic scanner, especially to your advantage. How many people are actually using that to their advantage with the SAR indicator? Because I did that maybe a couple weeks back as far as that training. that SAR indicator really helps a whole lot so that you know the best time for entry. So I will repost both of those, this video and the one I'm sharing with you on how to use the harmonic scanner. Because if the harmonic scanner is doing all the work for us, all we have to do is go in, pick the pair that we're interested in, determine if the market is going up or down based upon where the take profit is. If the take profit is above your entry price, that means it's going up. If you notice the entry price is up and the take profits are below that, that is telling us the market is going down. So it's a sell. So practice by doing that, but use the SAR indicator so that you'll know, well, maybe it's not time for me to get into the market right now. Let me come back to it and maybe wait. Or putting a pending order in would help out. So as I said, just refer back to the 100 section for doing pending orders. Check back next week when we have the class on definitely doing the pending orders, so we can bring that to life a little bit more for you. Okay? Were there any other questions before we let you guys rock and roll for your evening? Remember to go back over to mytradinglounge.com if you need to schedule some one-on-one time with Dan or myself, and make sure you're pulling out and going to YouTube to kind of check out what other videos have you missed. What have you missed to help out with anything? And then make sure you subscribe to the channel to get any new update videos that are coming out. All right. So you guys are good. You guys have an amazing evening. Lori Woodruff signing out, and I'll see you next week in the webinar room. Talk to you guys later.